The only all-out bet that would have won this year, it feels like, is the US dollar, David. And to that end, have you been looking at trying to capitalize on that sort of a movement, a strengthening in one particular currency versus the rest?
Yeah, oh, absolutely. I think we see the dollar continuing to move higher, even though on almost every fundamental measure it's overvalued right now. There's clearly in FX a long history of currency pairs trending, of momentum being a powerful factor. I think that's what you see right now. And of course, with idiosyncratic difficulties in China, housing market, COVID, the situation in Europe, war, energy shock, the US really is the place where at least modest growth seems most assured, as well as financial and health stability, as well. So I think that's why we are in a particularly strong dollar environment. And of course, as we see parts of the world economy fracture around geopolitical issues, I think there's a need for the safe haven of the dollar and the desire, to amass those holdings upon which key commodities are still denominated. So that's why I think the dollar, although optically very expensive, probably has more room to go and is a key part of any kind of risk-off strategy.
When does that begin to work against us here in the United States, whether it's against consumers or corporations?
Well, I think it's already been working against corporations. If you look at the last earnings season, there were a plethora of announcements around that. As I'm sure everyone watching knows, about 40% of S&P earnings are internationally driven. So I would expect that to be a key theme remain in the next earnings season as well. And really, that is going to be part of the broader picture. Can companies continue to defend margins? Can they drive efficiency in a gradually slowing top line environment to maintain to maintain earnings? Certainly, at the moment, I think that the strong dollar is more of an issue for emerging markets because obviously they borrow in dollars, and again, it's exacerbating the inflation and energy shock woes in other parts of the world like Europe. So I think the US can take it as a straight answer, but certainly some of the listed corporations with heavy international operations are going to feel that pain in earnings season.